What's going on, you guys? This is Aaron from Departures Capital Analysis, and welcome to this week's video. I know it's been a little while, guys, since we last dropped a video here on analysis. I've been super busy with Departures Capital, tons of interviews. We've had a crazy influx of new companies, so stay tuned to Departures Capital for all those new and exciting videos, introductions, interviews. I've got a ton of deals on the way for you guys, deals as in new companies. And also market news. Market news has been recapping the markets. We've seen a ton of volatility. We have seen gold spike above $2,000 per ounce, which it didn't hold, but we're going to be talking about a gold company today, and that gold company is called Agnico Eagle Mines. So I picked a large cap gold stock. This one actually ran quite substantially, and I picked it for a couple of reasons. They pay a decent dividend. They made a recent acquisition. I don't know about recent, but they've got a deal with Kirkland Lake Gold, which was one of my old favorite gold companies. They've got mines in some of the safest mining jurisdictions. So that was another reason why I picked that, because as we know right now, with all the politics going on in the world, mining jurisdictions, politics, all that, it's very important. So they're focused on Canada primarily, Kirkland Lake, Australia, Canada. So very safe mining jurisdictions. It's one of the best, if not the best, large cap gold stock in terms of mining jurisdictions, in my opinion. Anyways, let's get straight into the video. Last but not least, guys, you know the drill. If you do support the channel and all the videos I put out here, and this is a relatively new channel, kindly smash that like button. It means the world to me, and it helps my videos so very much with the algorithm, along with dropping me a comment down below, letting me know your thoughts on the video. Also, feel free to recommend some new companies, as I will be making more and more videos here on analysis. I'm trying to get out new and exciting content, similar to the content that I used to create when I had a lot more time. I want to make more videos like top 3 stocks, this and that, more specific videos on specific sectors, specific companies. I find those do the best in the algorithm. Obviously, market news drops a recap and I talk about a whole bunch of different things, but this is more specific. So the first thing I want to talk about is, in fact, the gold price. And we did see a nice spike here in the gold price due to everything that's going on in the world, in Ukraine, with Russia, all of that. I hope they can solve it eventually, hopefully soon, in a peaceful manner. I know there's a lot of crazy stuff going on. My prayers go out to everyone who's affected by this incident, and I hope it ends soon. But unfortunately, this conflict, never want conflict, but it has been good for the price of gold. It's been good for the price of gold, silver, oil, commodities in general. But yeah, that's the thing. Gold has always been a safe haven, and this seems to be, for now, the event that has ignited the price of gold. So as you can see over the 1 month chart, just a month ago, gold was trading just above 1,800. Over the last couple of weeks, we spiked up all the way to like almost $2,100. Let's take a look here. The high was roughly almost 2,100 an ounce, or almost 2,100 an ounce, maybe 2,080, somewhere in and around that level, and it's pulled back substantially as the markets rallied. Now, my only concern is people might be getting tired of hearing what's going on with everything in Russia and Ukraine, and unless something crazy happens, like some huge escalation, other countries come in, they invade another country, I'm not sure anything can happen. But unless, if this kind of just continues to simmer and we don't get any crazy escalations, my concern is that the price of gold may drop down back into the 1800s, or at least 1900s. I do feel like this environment, things will stay pretty heated for a while. We might see a floor for gold around 1800 to 1725. The thing is, everything's been beaten up so badly right now in the markets, and gold and oil have ran like crazy, but there's a lot of cheap companies out there, and I feel like a lot of this could be priced in. But I want to talk about a gold company today because gold's hot right now, and this is one stock that has always been on my watch list. I've owned in the past, don't own any right now, although do own large cap gold companies. Newmont, Kinross, although Kinross got hit recently because of the mines in Russia, and Barrick. So let's talk about Agnico Eagle. Market cap, and this is in US dollars. So we're talking about the US stock. You know what? We're going to just pull up the Canadian one. AEM.to. So it's trading for $78 per share. And the stock had a recent 52-week high of $89.95, which is pretty good. It pays a 2.71% dividend, which I wanted to highlight. That's pretty awesome, in my opinion, for a gold company. And it's got a $35.79 billion market cap. So we're going to jump to their website real quick. Take a look at a couple things. They recently announced their most recent quarter, so we'll look at that. Some info on Kirkland Lake, and just general information about the company. If I was to pick a large cap gold stock, of course, not financial advice, but Agnico Eagle would be one of my top picks if I was to pick a large cap gold stock. So we can see here the 1-year chart looks pretty good. There's the 5-year chart. So it looks like, it could have the potential to go back up to at least previous couple year high of $100. So I think it has some upside. Now, once again, like I said, I'm cautious right now. Gold has pulled back substantially, back down below $2,000 per ounce. We'll see we'll see what happens over the next little while. If we get some more volatility, if it holds $1,900 to $2,000, I'll be surprised. But in this environment, anything's totally possible. So Q4 and full year 2021 results. That is for Agnico Eagle. Now I want to talk quickly about their website and their strategy. So they're obviously a gold producer. The $35 billion large cap gold producer. Deliver on performance and growth expectations. So ensure our existing portfolio delivers on expectations. Lowers operational risk and generates free cash flow. Build and maintain a high quality project pipeline. So, of course, Kirkland Lake, instrumental into that strategy in terms of their project pipeline. Operate in a socially responsible manner, ESG, develop our people. So I just want to look at their properties. Agnico Eagle's operating mines are located in Canada, Finland, and Mexico. I didn't get Mexico, guys. Sorry about that. But still North America, and I consider it a relatively safe mining jurisdiction. However, companies have had some tax issues with Mexico, especially silver companies. So not as safe as Canada, in my opinion. But yeah, so let's see where the majority of their mines are. And as we can see here, guys, the majority of their mines are in Canada. So we've got Hope Bay, Meadowbank Complex, Meliadine, I think that's how you say it, Detour Lake, Macassa, and Goldex. And then they've got Pinto Altos, La India. So let's talk quickly, and it has been a while since I've analyzed a gold producer. In 2020, payable gold production totaled 1.73 million ounces of gold, with production cost per ounce of $838. Total cash cost per ounce $775. AISC of $1,051. So they're all in sustained costs, $1,051. So with that, and I don't know if that's in Canadian dollars, but if that is the case, wow, they're producing gold for pretty cheap. So the 2.6% decrease in gold production in 2020 compared to 2019 was primarily due to temporary shutdowns, Mexican and Quebec governments due to the global illness. 2021 payable gold production is expected to be approximately 2.05 million ounces. So that was in 2020. We're going to be taking a look at their most recent news release, like I said. So guys, they've got an interactive analyst center. But first thing I want to take a quick look at was, in fact, their quarter. So let's look at the company's quarter. Let's do a little bit of analysis here. So 2021 highlights: record annual gold production was 2.03 million ounces. What is the AISC of 1,038? So that's pretty good. Strong quarterly production in spite of the global illness impacts. So merger with Kirkland Lake on February 8th, 2022. The merger with Kirkland Lake Gold was completed. So new 3-year operational guidance. Payable gold production for 2022 is forecast to be approximately 3.2 to 3.4 million ounces. So that is, of course, with the onboarding of Kirkland Lake Gold. AISC expected to be between 1,000 and 1,050. So strong combined mineral reserve base totaling 44.6 million ounces of gold. So they've got a lot in the ground still. Large exploration program planned for 2022 with a focus on mine site and pipeline opportunities. So they have a $324 million 2022 exploration budget. They expect to create $2 billion in value over the next 10 years. So their Fosterville mine, this is Kirkland Lake's flagship asset. Their long-term goal is for Fosterville to establish the mine as a long-life asset through success in replacing mineral reserves. All right, guys, it's time to look at the balance sheet. So let's see how things compare. Alrighty, guys, we're taking a look at the balance sheet now. So Agnico Eagle Mines Limited consolidated balance sheets. This is in US dollars. Add 3 zeros, it's in thousands. So comparing December 31st, 2020 to 2021. So December 31st, 2020, the company had 400 million in cash. They had 1.24 billion current assets, 9.6 billion in total assets. Fast forward to December 31st, 2021, they had 185 million in cash, 1.3 billion in current assets. So current assets increased, and so did their total assets of 10.1 billion. Inventories also increased, so that's the main change when it comes to current assets, along with other current assets increased by 40 million ish. Cash decreased quite substantially. My assumption is going to be that was from the Kirkland Lake deal. I didn't look too much into it. Liabilities increased as well. So total liabilities, so 3.9 million in 2020 to 3.9 billion in 2020 to 4.2 billion in 2022. Now, in terms of current in terms of current liabilities, 515 million to 761 million in 2022. So they did increase their current liabilities, total current liabilities. Why? Let's take a look, guys. Current portion of long-term debt. So they added 225 million in long-term debt. Before they had none. And everything else pretty standard. In terms of liabilities, like I said, the long-term debt increased by about 200 million. Their deferred income and mining tax liabilities, 1.2 billion as opposed to just over a billion for 2020. Overall, nothing dramatic has changed, though, at least for this balance sheet. And, they also acquired Kirkland Lake. So, I think that makes sense, but that was a huge acquisition. Or could you say merger? You know what? Let's look up the news. So, Agnico Eagle and Kirkland Lake Gold complete merger transaction. The combined company will continue as Agnico Eagle Mines Limited and will remain listed on the TSX. Agnico Eagle issued approximately 209 million common shares to former Kirkland Lake Gold shareholders as consideration for their shares at the opening of markets today. The new Agnico Eagle had a market capitalization of approximately 22.4 billion USD. So they essentially merged, which is, in this case, they basically acquired them for 209 million shares. So my assumption is that's the difference in terms of the balance sheet. So let's take a quick look. Revenues. Let's just do year ended. So revenues have increased from 3.1 billion to 3.8. Net income, 511 million to 543 million. So everything's looking good there. It's increasing. Now 3 months ended December 31st, 2020 to 2021. Revenues increased, but net income decreased. What is the cause of this? So before they had 293 million in income before income and mining taxes and 188 this time around. So some more research to be done, but overall for the year ended, things look pretty good. So guys, I just want to quickly now talk about my thoughts on the company, my thoughts on gold. Like I said, this could be the start of a really big bull market for gold. How high do I think gold is going to go? Well, let's pull up the chart for gold right now, and I wanted to focus on like the 5-year chart or even the max chart. Max chart. That's not really the max chart. That looks terrible. So the thing is, guys, my only concern, we saw back in 2008 to 2011 a really awesome rally for gold. And then it sold off a little bit for like a year and a bit, and then it rallied right back up there. So this is kind of what we're seeing again. I'm just not sure if this time it's going to be a full-on breakout, and gold runs to, let's say, 2,500. All the gold bulls, they're pushing for, mid 2000s, which I definitely think is possible. And we're in a much different environment that we were in back in 2008, because back in 2008, quantitative easing, monetary policy, all that stimulus, that was just the tip of the iceberg. We've gone into full-blown monetary stimulus, and if the dollar gets shaky, which it's kind of looking like, then we could see some more upside for gold. I do feel like gold has a stronger bullish case now this time around, but the thing is, there's also alternatives. Back in 2008, there wasn't things like cryptocurrency to invest into. Tech stocks, tech stocks were, the market wasn't where it is at now, but long story short, there's a lot of competition for gold. That's my only concern right now. Don't get me wrong, it still could run, but I feel like this is being fueled by the geopolitics and less, about that whole safe haven aspect. Because people love to hedge. People love to hedge with Bitcoin and things like that nowadays. Cryptocurrencies, digital assets, all of that stuff. So hard to say where gold goes right now, guys, but the reason I picked Agnico Eagle, like I said, was for its safe mining jurisdictions. They merged with Kirkland Lake Gold, which I've always thought was a fantastic company, so this just makes them an even stronger company, in my opinion. They pay a strong dividend. They're relatively defensive, and I still think the stock has quite a bit of upside. So for those reasons, I wanted to talk about Agnico Eagle Mines. I think, if you were putting together, let's say, like a long-term gold, low-risk hedged portfolio, I think there's definitely a spot in there for Agnico Eagle. The thing is, with the large cap miners versus the explorers, we're seeing a lot of the explorers stagnate and really not do too much, just because it's been tough for the last couple of years. And some of them had to raise money. They're exploring for gold. They're not producing. They're not making money just yet. So that's why, from what I've learned, it's hard to time the market when it comes to, exploration companies. You can make a killing, but if I was to put a portfolio together in terms of exploration companies, I would pick like 10, put 5 to 10% into each one of those, or, let's say 10 to 20 companies, and put 5 to 10% into each one of those companies and just let it sit for a couple years, see what happens. Some of those are going to go to zero. Some of those are going to do, maybe a 10x, something like that. But it just takes one or two in that case. But if you're putting together like a normal portfolio, I would probably go with some explorers, but more exposure to the large cap stocks. They're less volatile. They run when gold runs. They don't lag the market as much. It's just a lot more safe, in my opinion, with the large caps. So anyways, let me know your thoughts on the gold and silver sector. I'm totally open. I am very bullish on gold and silver, but I'm just, I've seen the way that things go before. I've covered gold for quite a while, and this could be the start of a tremendous bull market. Don't quote me on this, guys. I hope it is, but we'll wait and see. So that's it for the video, guys. Thank you so much for watching. Drop me a comment down below, and we'll see you in our next video. If you like these videos, kindly hit that subscribe button and the bell for notifications. Drop us a comment down below. We'd love to hear from you. And finally, always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. Furthermore, this video may or may not have been sponsored by the companies that we've profiled within this video, and we may or may not own shares of any of the profiled companies in this video. If you want to know the full disclosure details, check the description down below, along with thoroughly reading our disclaimer. Thanks so much for watching, guys, and I look forward to seeing you in our next video.